Hi everyone, my name is Jasmine, the creator's tax strategist and coach. If you're new here, I help high-earning content creators and entrepreneurs save money on taxes through tax planning and strategizing for now and for the future. I'm well known for using a legacy and wealth trifecta to illustrate my clients' tax and asset protection plans for them in a single diagram. In today's video, I want to talk to you about how to effectively track your expenses in your content creation business, or really in any other business you might be running as an entrepreneur. It's really important for you to know what to do and what not to do in order for you to be able to pass an IRS audit, which is what really matters aside from having the financials to make business decisions off of. So if you're looking to learn about how to effectively track your expenses as a content creator, then please continue watching. There's 4 items I'd like to share with you as it relates to effectively tracking your expenses in your business. There is the use of apps and softwares that can help you catch events in real time. There is the use of a spreadsheet that can also be effective and useful. However, it's not my favorite. Of course, you want to make sure with either one of those 2 procedures of capturing your expenses, either through an app or through a spreadsheet, that you are maintaining receipts of those transactions and that you are reviewing the financial statements that are derived from your spreadsheet or software on a regular basis. For the first one, the use of apps and softwares. As it relates to using apps and softwares for effectively tracking your expenses, I like QuickBooks. As a matter of fact, in my office and for all of our retainer clients, we provide bookkeeping and accounting services through the use of QuickBooks because it allows us to capture our clients' transactions in real time. See, with the client's business bank accounts connected to their QuickBooks, the transactions are feeding into QuickBooks in real time within a 24-hour period generally. So as the client is making transactions, either income or expenses from within that business bank account, those transactions are feeding into the QuickBooks software, which allow us to not only sort and manage those expenses in a timely manner, but also then to effectively use that information to make business decisions. That's why I mentioned earlier that although having a spreadsheet is a wonderful tool in your business, and I recommend having one rather than not, I don't believe that it's the best effective use of managing and tracking expenses because it still requires you to go dig up those expenses from bank statements and pull them into a spreadsheet. It is true that you might have had some automation set up to do that. However, you're not able to then pull reports from those transactions feeding into that spreadsheet, which again is the reason why I love using an app like QuickBooks to receive the transactions into our accounting software, to be able to work with those transactions in real time, and to then also be able to pull reports to analyze things such as profitability, cash flow, the health and the longevity of the business based off of your balance sheet, and just so many more metrics that you're able to manage when you're able to actually pull reports from the data you're collecting in tracking your expenses. All right, so we've gathered that you can either use an app like QuickBooks or a spreadsheet that you've created, maybe based off of a template, in order to track your expenses. Although I've made it clear that I would love to use an app like QuickBooks because we're able to gain the information in real time, I don't want to deter you from maintaining a spreadsheet because some people are just spreadsheet people and use a spreadsheet even while we maintain a QuickBooks account for them. Regardless of which one of these 2 things you're doing in order to actually track your expenses, it's very important that you are still maintaining receipts for those expenses. See, the fact that you have your business bank account connected to your QuickBooks and therefore your transactions in your business bank account are automatically syncing into QuickBooks is not enough substantiation if there was ever an audit where an auditor wanted you to bring evidence forward about a specific transaction being a legitimate business tax write-off. Think about this. You might go to Target and buy a printer and have purchased that printer using your business bank account, so your Target transaction will end up in your QuickBooks for us to monitor that expense and track it to use it as a write-off. However, the simple Target transaction on your business bank statement does not substantiate the Target transaction to be a business expense. You could have bought anything at Target and used your business business bank account to do so, which is why it's very important for you to maintain receipts by simply snapping a picture and being able to later match that transaction, and by later being able to match that picture detailing what was included in that transaction with the actual transaction that came in through the bank or that was added to your spreadsheet. The fourth thing I want to reiterate about the concept of tracking your expenses in your business is that you've got to be reviewing this information on a regular basis. If you have the capacity to review it on a monthly basis, at minimum, review it on a monthly basis. If by any chance you are an entrepreneur that's wearing multiple hats in your business and doesn't have the time to review it on a monthly basis, then you for sure have to be maintaining it and reviewing it at least on a quarterly basis so that you can make sure that information is available for you to make quarterly decisions, as well as file quarterly estimated taxes, since you're an entrepreneur that likely has that obligation. So remember, tracking your expenses in your business allows for two very important things. One, for you to always be ready to make real-time decisions and for your business. And two, for you to be IRS compliance ready if there was ever an audit and you had to substantiate the expenses that you took on your tax return. Don't be left holding the bag and then having to go back and pay penalties and interest on any deductions that were unturned, on any deductions that were deemed not deductible because you just simply couldn't substantiate them for an auditor. If you enjoyed this video and would like to stick around for future ones, then please don't forget to subscribe to our channel and like and comment on this video so I know how I can best help you in the future.